this tutorial. This is a comprehensive record system for your school. Alright, as you can see here, we're going to do a quick overview of how this record system works. So welcome to it. Now, as you can see here quickly, this is a student database system. Alright, semester 1 and 2. That means for the entire year, this is the database that you're going to keep for the students. Alright, all the students that you have here, you're going to fill in this place. Alright, with that information, the number, the name of the student, the date of enrollment, the sex, the date of birth, place of birth, contact cell number. Then we have current address, how is student supported. Is it that they are supported by their parents or they are self-supported? Now, if you look here, when you hover the mouse over this place, you will see this information right in the box on the following. Sorry, right in the box, one of the following. You have parent, you have guidance, you have self. So it depends. So if this student, for example, is supported by parent, you write in here parent. If he or she is self-supported, you put in self. That's all. The mother name, is mother alive? Just put here yes or no. Father's name. Alright, is father alive? Yes or no. Great. So that is how the database area going to be filled in. Alright, now we come here to the next on the taskbar. Here we have something like beginning elements to start with. I'm going to explain that to you. This will help you to set up your balance sheet. Maybe you are beginning a new year and what you have, perhaps your school is not a new school. Alright, you came in with some cash and some receivables. Receivables have to do with what you expect from students or donors or whoever. Money that you expect coming to the school. That's what we call receivable, but you have not yet received it, but you expect it to come. Alright, we got prepaid expenditures. Prepaid expenditure have to do with maybe rent that you are paying in advance. For example, you are renting the facility, alright, the school's facility, and perhaps you pay for 5 years. That 5 years payment is an asset. Alright, you have not yet consumed the 5 years. So that becomes prepaid expenditures. Alright, then we come here, land. If you bought land, you can have it here. Put the value of that land here. That means you are beginning the new year. This is why you came into the new academic year. The value of the land will come here. The value of the building, if you have a building, the value of it will come here. Furniture fixtures, if you have that, you have the value placed here. And then general equipment, you put it here. Whatever the value of the equipment you come in to start this new year with, you have it placed here. Right? Don't write anything, any of the zeros, as you can see. Do not write here. So these places I area that already pre-calculated. So if you tamper with this place, you will destroy the formula used here. So don't play with any of these places. Alright, don't write anywhere you see zero. This is a strong warning. Do not write there. Alright, now we come here. This accounts payable. Accounts payable have to do with what if you hover the mouse here, you will see some of the from some places. You hover the mouse, you see there's a current short-term financial obligation you have put in here to begin with. That is maybe you were owing before starting this year. Those that you owe, the amount that you owe, you will put it here. That is account payable. That means that's something you're supposed to pay. Alright, then we have wages, salary payable. Maybe before you came to this year, to begin the new year, you still owing some teachers that you're supposed to pay, or administrative staff, whatever it is. The value of what you owe for salary or wages, you put it here. Interest payable, maybe you took a loan and you are still paying the interest, you put it here. All right, that means the one you still supposed to pay. If you have not yet paid it, maybe you pay portion, the balance that remain, you put it right in here. You got notes payable. That means, as you can see here, it's a documented financial obligations you due to settle, but didn't, but didn't. All right, you say I all together and put a total here to begin with. All right, that's why I tell you here. Now the notes payable is just obligation that you sign document for that you're supposed to pay. Maybe you credited and you made a document that you pay a certain time. That becomes notes payable. It's now legal because it is no longer a gentleman agreement. All right, then you have taxes payable. If you didn't pay government tax, income taxes, or whatever it is, and you know the amount that you're supposed to pay, so you put it right in here. All right, then we have loan. Did you take a loan? You put it right in here. Now, if you took loan and then you enter in this particular period with the loan, the balance loan that remains, you put it in here, and then you should come to the banking area and put acquire loan. This is the banking area. We'll discuss this. You put amount. There is the acquire loan portion of this document. You say amount, loan amount. You put it the amount that you owe now. All right, the amount that you credited from the bank at the time. You put a total here. All right, not the balance, but the total. You put it here. Then the percent that was given you, if maybe they say pay 12%, pay 25%, you put that 25 here. Just put 25 here and it will automatically calculate the interest that you're supposed to pay. Then the date you took that loan, put it right in here. Then if you are paid any amount, you put a prepaid, that's the repaid amount right here. And the date you did that payment, you put the date right here. That's what you're going to do. Alright, so we'll come back. So that is for land. Now say for loan. You come here now. Now this area, just leave it like this. This is your equity. Any amount you see here, it will be done here automatically. The equity is what you own in the entire business. For example, if you have $100 and within that $100 you have um, you owe somebody $50. So that $100, that entire $100 is not yours. $50 there for other people. So that means that $50 there for you. That becomes your equity in that $100. So that's why we appear right here automatically. You don't have to scratch your head to do that. This is already pre-calculated. If they put the information that you're supposed to put in here, and the rest will be done for you. Alright, so that is the beginning value to start with. When you do this, the balance sheet right here will be set automatically. Alright, you come to registration. This is where you're going to put all your registration, the student's name, the class, the cost of registration. Is that 500 for your registration? You put a 500 here. The amount student pay for first payment, second payment, third payment, everything will be here. We'll demonstrate that. And this is the tuition column. Here you can put the cost of tuition, then so on. Then there's other fees. Maybe you charge students to pay certain amount of money, and you put it here. The purpose for that money, you put it in here. That's what it's for. You got the expenses. This is where you're going to do all your expenses. As you can see here, now we have by default we have project salaries, supplies, administrative expense, rent, holidays, depreciation. These are here by default. If you ever want to add up, you can add up to your expenses. Maybe you have other expenses that you make and you have the bin for it, you can put it here. And when you put it here, don't forget to put in the income statement right down here. This is the income statement. So whatever you put that depreciation, you see the depreciation here. So if you put different expenses, as you land it all here in order, just do the same right to the expenses here. Great. Then we'll come to receivables. There is a record for the receivables. Alright, amount student owe you will appear here automatically. When you see the zero here, you don't have to do anything there. Then donors, that one you will do it. You have to write it there because there is no zero. So among donors you expect to receive from donors, you put it here. Maybe you have others like eminent citizens want to donate to the school. They promise to donate to the school, and you show of that promise that you're getting that money. That become a receivable. You can put it here. All right. Then if you receive any amount at the end of the period now, the amount that you receive from the students, you put it here. All right. And then the donors, what you receive from donors, you also put it here. And then others, you put it here. And the balance will appear here automatically. You don't have to do anything. Then you will come down here. Uh, the amount that you will demonstrate that right here. The amount that will be here. Sometime there's something called bad debt. All right, certain percentage you may not collect from the students before the year end. Even promises that will be made to you, maybe from donors or whatever. Maybe certain portion you think you may not get. So you assume that here based on experience. So if that 5% you think you will not get, put the 5% here, it will automatically calculate and give you the allowance for uncollectible funds. That is what sometimes called bad debt. All right. Then we come here. There's a payable record. All right. Those entities or individual that you owe. This is where you're going to put a record. The description of the debt that you owe, the total debt, the date of debt, the amount you have the school pay during the period. Then you have payment date, balance school due, and the due date. Great. So we come here now. There is the financial report for the first semester one. So whatever you do is going to appear here. So you don't have to also write anything in this place. It will be done automatically for you. And anytime you want to print report, you just print this page out and you are done. All right. You don't have to write anything here. That's how the whole system is automated for you. Now there is the banking information for your school. If you look here, you have a monthly banking record of deposit, withdrawal, acquired loan, interest, repayment, and bank charges, all in one place here. All right. So here, you whatever, for example, if the students do all payment to the bank, okay, if the students are depositing money to the bank whenever they come to do registration or tuition, if you send them to the bank, that means whatever is being deposited in the bank, it is your bank deposit. So when the student bring the slip back to you, you collect whatever slip that you have collected, the amount that you collect from the students. Here is where you're going to put them. Maybe for the first time, the first payment, the time you start your first collection on registration. After you have collected that first registration from them, you have the record already. Here is where you're going to put it. You put the name of the bank that they are depositing the money in. If that one or two banks, now you can put it there. You have the slip with you. You will know which one to put where. Alright, then you have the withdrawal amount. If you withdrew any amount from the bank, here is where you're going to put that amount that you withdrew from the bank. Alright, for whatever expensive, you will able to be able to put it there. Alright, now that is, then here we have bank charges. Alright, service charge. Whatever service charge that you were charged, here is where you're going to put it. Alright, maybe SMS charges. Alright, those are service charges. Maybe when they send message to you, to your account, to tell you the state of your account. Alright, perhaps the bank will deduct small money for SMS. Here is where you're going to put it. Apart from that, if there's any fees charge, maybe credit card, maybe if you have a credit card with the bank and there was some charges, here is where you're going to put it. That is this portion of this document. Now this I have to do a quiet loan. I just explained a moment ago. Here is where you're going to put a loan amount that you credited. Here is where you're going to put it. That's the loan you took. And then the percentage, the interest, and so on. So if you took full file loan, just put everything here. Alright. Now you put the date and then the loan repayment. Here is where you're going to put it. If you repaid any amount towards the loan, here is where you're going to put it, the date of that payment. All right, that is about this record. Then come to the income statement. This will be done automatically. You don't have to write anything here. Okay, so anytime banking institution want to credit you, they may request for your income statement. You just print this document and give it to them. It's very simple. And even the balance sheet. The balance sheet shows the position of your business or your entity, how strong it is financially. Some banking institution want to know the strength of your entity, so they will request for the balance sheet. The balance sheet show the asset that you have, the liability within the asset, that be the one you don't own. It is the liability there. You're still trying to pay it. So everything is within this balance sheet. So the bank will know the total value of your business from this, or your entity from this balance sheet. Because what people own there is a liability, they will deduct it and they will know. Your equity will be way down here. I think I explained to you on the other side. They will know your strength from your equity here. Alright, then they know that I think we can credit this man, even if whatever it is, the equity is even more than what he want to credit. Alright, then we that's the balance sheet. Then see the cash flow statement. This cash flow statement is very important. It shows whatever financial institution or investors, whatever it is, they may want to know the state of your statement of cash flow. They want to know how money comes to your business and how money goes out of your business. All right. So come here. There is a tax. Okay, it's the employee income taxes, but this is not just limited to employees. You also have the school, the taxes that you're going to pay for the school. This is done automatically. Again, you don't have to do anything here. The only thing you will do here later on is the net income of whatever you collected will appear in here automatically, and then that net income, because it's net income before taxes, so it will appear right here. So the tax amount, maybe government will tell you that 4% of that income is for government. If that be the case, you put a 4% here. Just put 4 here. You only put 4. Don't put a percent simple. Just put 4 here, or 3 or 2, whatever it is. You put it right in here. The rest will be done automatically. All right. Then when you do that, the income taxes for the business, for the school, will appear right here. The income tax from the payroll. Now the payroll income tax will appear automatically here. We'll get the payroll. All right. Then the both will be here. Total coming here, and the amount you paid. And you come here, and the date of that payment, you will put it right in here. And then here, balance taxes payable as of, maybe as of the very period you close their accounting period. You put it here. If that December 31st, you can do your reporting. You put it December 31st right here, and the year. All right. So that's how the whole thing is. But it depends on your school year. So if school year starts maybe September, maybe by August it may close. You may close that particular period. So whatever period it is, you will put the time here. The ending of that period is what you're going to put in here. Great. That is the tax information. Then we'll have the payroll here. You have everything set here for you. So like I said, you just put information in. Put the name of the employee, the job title of the employee, the gross salary, the income taxes that they pay. If government deducts 2% for them, you just put the 2 here. If that 5%, you just put the 5 here. Whatever percentage that is collected as income tax per individual, here is where you're going to put it. All right. So that's the payroll. You put it there, and then it will appear automatically. If you put the percentage amount here, then the income tax will appear here. Then the next salary will come here. You get a salary advance. If you did a salary advance, you put a salary advance here. Advance date, you put it here. Then you have the total deduction. That is the income tax plus the advance salary minus the gross salary will give you the total deduction. Then here now at the end of the month, the amount that you give them now for their pay, maybe the balance that left is what you're going to pay here now. Then here is where you're going to write that balance. You will write in here. That means at the end of the month, you pay them. So what you pay, what left for you to pay them at the end of the month is what you're going to put here. $800 left, and you paid $90. the $10 will still be here as balance payable, and this will reflect on um, your information there as salary or wages payable. All right, so that is that for the payroll. Then we have notes payable. Now the notes payable we're discussing in the beginning value, beginning element to start with. This is where you're going to put the information, the note that you people made. So you're going to put the purpose of the note. All right, the purpose of the note. Maybe uh, we took 15 chairs from a carpenter, and we're supposed to pay 15 chairs. That's the description of the note, for example, the purpose of the note. And then your signed document. So the amount of that 15 chairs, for example, you put it here, and the date, then the amount paid, you put it here. The balance will automatically be here as of. So at the end of the period, the balance will remain right here. If there is zero, you just put the date here that at that particular end or period end you didn't have anything to pay somebody. So that's how you're going to do that kind of fixed assets. Fixed asset is just uh, assets that you own. All right. For example, you have land. If you have land, we just put here by default. You got other assets that you may put here. All right. So we have land here, and the cost of the land you can put it here, and put the date that you acquire that land. And you count the asset, another building. If you built a building, you put it here, and the depreciation, everything will be here. If that building you expected to last for 35 years, you know, and you're going to put it here. All right, you go within that 35 years. You say how long within the 35 years, or in a 50 year, in the 100, whatever it is, what will be deducting? The depreciation will be depreciated because it will not be the same as it was. Every year that building will depreciate. So you will determine the depreciation value. So you will put it here. So the 35 year or the 50 year, this is where you're going to put it. You're going to put it among here. Now, the total annual depreciation automatically will appear here for you, and the monthly depreciation will appear easily for you. Great. So the same thing with furniture and fixture. This is how it will be, like the depreciation of them and so on. Some of the chairs that you have in the classroom, in your offices, and whatever it is that you did as furniture. All right, this is where you're going to put the cost, and they must depreciate. So you're expecting it to depreciate. That, for example, some of you have breakage fees within your registration and what have you. Well, for this case, when you come here, you assume how long the chairs will stay for, or how long your office furniture will stay for. So you put all together, and then you put a lifespan of those in the record here. All right, that is for fixed asset. Then we come down to equipment that you purchase. The same thing. You just put the equipment name here. All right, the cost of the equipment, the date you purchase the equipment, the lifespan of it. Maybe you want to take the manufacturer warranty of that equipment. I will there for you. Maybe the man says, I give you 1 year. It's guaranteed for 1 year. After 1 year, you don't come to me. But within 1 year, if anything happens to it, I'm responsible. Maybe you can consider that the lifespan of that particular equipment. Or you know that the equipment maybe may last long. So manufacturer warranty doesn't mean that should be the lifespan of an equipment. Okay, the lifespan of equipment can go, it will go more than the warranty of the manufacturer. So but you will determine that. So if that 10 years, put a 10-year right here. By default we just get one or all, but you can change it here. All right, but where you see zero is where you're not going to write. Great. Then we have here prepay expenses. That's semester 1. Whatever prepay expenses you did, like we're talking about rent. Maybe you pay rent ahead, you put it here. All right, so that amount that you pay ahead is where you're going to put it. The amount that you have consumed, maybe you pay for 5 years, but you have consumed 2 years. The value of that 2 years, you put the amount right here. For example, you have 6 months rent, and each month you pay $1,000 for each month. All right, but you pay ahead 6 months, but you have gone 2 months. So what you're going to do, you put a 2 month value here. That means that 2,000 have decreased this money. So you put the 2,000 here, the balance will be here. It will be adjusted right here. Alright, if that maybe you pay for 5 years or 10 years lease or rent, this is where you're going to put the amount that you are consumed. So you put the total value here first for the 10 years. Maybe the 10 year that 200,000, but then out of the 200,000 you are consumed 5 years or 2 years. That 2 years consumption is what you're going to put here. So you know how much you're paying per year. So if that 2 years, you times it by 2. The amount you will come to, you put it right here. Then it will decrease this amount, and the new value will be here adjusted right here. Alright, so that is the reason for this document. So that is how the whole thing. Now, this way is semester 2, beginning right here. As you can see here, beginning elements, semester 2. So you don't have to, I don't have to go again explaining all of this, because of the same thing there. So there is just a quick overview of this document that we're going to be dealing with. So we'll come back, we're going to start a transaction so you can understand how we put in videos into this system. So thank you very much for watching. I'll see you in the next video.